Hello, everyone. Joshua Hayes with another weekend update from BigWaveTrading.com. This market is beyond impressive, beyond strong. Listen, since September, I've had a bias of looking for a pullback short term while remaining very bullish intermediate to long term. And to know exactly where I stand, you can basically just listen to every single thing Tom Lee ever says on CNBC or on his Fundstrat YouTube page, and I'm in complete agreement with him. So long-term portfolio rocking, quarterly portfolios rocking, almost 2x to the SPY this quarter alone, which is shocking to me since it's quarter three. Swing position accounts, while they continuously are going through drawdowns, are still not pulling back much, and now we're fully invested again. I'm not on margin until after today's session. I am now willing to use all of my buying power on every trade setup, but in the middle of the week, switch to going back to 100% all in on every single long signal following Friday's session. Once we had this session here, which I believe was Monday. So once Monday's session happened, back to being 100% long any stock. If I got two signals, fit whatever account capital is out there, 50% go into one, 50% goes to the other. If I only get one signal, all of my capital goes into that position. But after today, we're going to use all of the buying power. But this market, like I said, I've had that personal bias at short term. Thought, oh, here it comes. Here's the pullback. Oh, nope. Okay. So we're going to start it finally. We're finally there. Nope, nope, nope. Oh, here it finally comes. But I tell you what, this market, so impressive. Following this big control candle 2 Fridays ago, we had a weak bounce, weak close, another bounce day, weak close. I like that we close higher than where we opened, but still, that lack of the high day close left a lot to the imagination. Then you had this candle, great intraday reversal, but the close is weaker than the open. Now, finally, it looks like, okay, now our pullback is going to start. No follow through the next day, and then we're gapping up. But when we gapped up, we did it on lower volume. This is the same for the SPY and the QQQ. They both gapped up. They both had lower volume. So I was convinced that now, well, not convinced. I've been around too long. I really don't have bullish or bearish like biases that are set in stone. But I became pretty convinced. I had my tickets indicator showing negative divergence. We're now gapping up. It's not like that we gapped lower and had a strong close and then finished at this level. Instead, it started with a gap up with the below average volume. I'm thinking following this session 2 days ago on Wednesday, all right, we're finally here. Now we're finally set up for the real pullback in the market. And instead, what happened was nope. Today we gapped up after CPI, strong session. Now listen, volume wasn't huge, but I can't fight new all-time highs. Is it possible this could be a fake out breakout? Absolutely. I mean, 100% it could be. But I have to play it like we're just going to keep on going, and I'll just be close to the vest. So SPY, QQQ, looking great. There's nothing I can do here. The only issue I have is on the day that we basically destroyed all of this consolidation, was moving higher, we gapped up then rallied. And then today, another gap up and rally. We didn't rally too strong. We didn't close the highs on the QQQ. If you look at the IWM, we actually closed lower, setting up a potential double top here. So it isn't clean. And I tell you what, one day, oh, everything's going to hell. All right, we're fine. Everything's going to hell. All right, we're fine. And that's just the kind of market environment that we find ourselves in. So I'm going to continue to operate like it's going to be choppy. We could easily have a sell off. I still think we're going to have a pullback before we have a very strong end of the year rally. But I am completely in the Tom Lee camp. I think that 690, 700, 710 close on the SPY by the end of the year is definitely in the cards. And I tell you what, considering all the internal weakness that we just had, all of the bearish divergences in the technical indicators that I just had, and yet we're resolving to new all-time highs today. it's almost impossible for me to even on the short term be bearish, to even be looking for a pullback. But I still am. I still think we could get a fake out breakout here, especially with the way that IWM traded today. And I'm seeing a lot of V ramp rallies, and there's so many extreme moves off this like recent low here in the market that my pocket pivot point signal scans, which look for the heaviest volume on an up day in the past 10 days with the stock at or very close to its 10-day simple moving average, those scans are basically empty after Friday's session. So there's no grade A setups. I did miss one grade A setup the past week, and that was an open. And once again, it's this hammer candle touching the 50 SMA. My favorite ones are off the 21, but when they happen off the 50, as long as the 21 EMA is above the 50, I'm good. But normally I like to see the 9 above the 21, and we don't have that here. So with the market weakness and with that 9 being below the 21 with that 50 SMA bounce, I went ahead and did not take it. And of course, whenever it goes 20% higher one day, you regret it a little bit, but at the same time, the 9 was below the 21 EMA on this 50 SMA bounce. And if that's the case, I need to at least then see the 5 EMA above the 9 EMA. And I just didn't have that aligned. And like I said, this was 2 days ago. It really looked like the market was going to roll over. But besides missing that one, I took all the other signals I could get. And actually, let's go ahead and move it to Telechart version 7 for all those. But before we go there, I want to just show you that the VIX is back below the 50 SMA. That's really good, but if there's a quick reminder that things could still get bad, the market started to sell off this recent February with that 9/21/50 stack. That's what we got before the most recent sell-off. And the 50 SMA did come back below the 50 here, but you will see we were above the long-term moving averages still, and then we had the real sell-off. Here, we're below all the long-term and short-term moving averages and now back below 50. So it's possible still we could get another leg, which would be the real correction before the end of the year rally. But I have to play it like that's it, that we saw our correction. I've got us below all of the moving averages. We're back below 20. It's just almost impossible for me to remain even short-term bearish here. But I am open-minded that it could be choppy and volatile, and I'll trade accordingly. And I do have one new long position for this evening. So before we go to Telechart version 7, I want to go ahead and bring it up on Telechart version 25, and I want to make it very clear. This is not a grade A setup for me. This would not be, oh my God, where can I raise capital from and what account has any cash available that I can put into this signal. To be a grade A signal, you've got to have a catalyst event that confirms the long signal that I'm getting, or a theme event, or a strong group relative strength, or amazing fundamentals. Now, the stock that I have this evening for a new long position has great fundamentals, but it's not in a strong group. There's no catalyst behind it, and it's basically just a price volume balance of power signal. So before we look at it on my antiquated Telechart version 7, I want to show you that the reason why I'm going to take PUK is because look at this powerful previous uptrend in this insurance stock. That's an 85% move. And even from the April lows, you have a 50% move. That's a pretty big move with a very little decline for this current consolidation that it's in. And what I'll show you that I like on this chart, I'm double green on my daily. When I go to weekly, I am not triple green. I normally like to see triple green. I'm not there yet. So we got one strike against it, right? But I'm double green here. That's good. I'm in a squeeze, in a slingshot. So that's all good. But here's the issue that I have. While I have the 5 above the 9, I don't have the 9 above the 21. So I'm not completely aligned there for this BOP price and volume signal. Also, volume isn't a volume truncation of the past price bars going all the way back here to the last October in the past year. This is not a volume truncation. So there's yet another strike. Volatility stop is still above the price. So that's yet another strike. And just to remind you, I've had two grade A price volume BOP setups, only one has worked. EME, when I got this one here, all the short-term moving averages, 5 above the 9, 9 above the 21, and then whenever it initially worked, which is always a good sign, it then rolled over, but gave us a great buyback, load the boat signal. And even on this pullback buy point, the 9's above the 21. And if you look at the upper left, you can see the 5 was even above the 9 here. And we're still in a medium squeeze. The one that failed was GVA. When we got the grade A signal on GVA, the 5 was below the 9. It didn't really initially work, even though it did try on day one. Then whenever we got the buyback signal from this potential grade A signal, we've got the 5 below the 9 and the 9 below the 21. No shock that it just didn't work out. Plus, I warned that we were in that tight squeeze, which is always, you would think that would be super bullish, but in fact, it normally means that you're going to resolve lower. And that is what, when you're in such a long consolidation, and that's exactly what happened. EME never entered that tight squeeze after the grade A signal, had it for one dot before, but it resolved out and higher with the medium squeeze. PUK is in a loose squeeze, so that's got it. That we have that going for it. So let's take a look at it on version 7. So here's version 7. So what you can see here today, you've got that move off the short-term moving averages above the 50 with that volume surge, pocket pivot point signal, and green BOP. But once again, did we truncate the volume bars of the past year? No. These volume bars are bigger than this one. Did BOP surge all the way to max green? No. Is the 21 EMA above or below the relative strength line? Below. So whenever EME signaled, EME might have been slightly below the 21 EMA of its relative strength line, but it was stronger. We got the max green BOP. We got the volume truncation. GVA, like I said, we got the volume truncation. We got the max green BOP, but we didn't have the short-term moving average line. So PUK is nowhere near any of this. So if I had to degrade it, it's a grade B minus. I'm going to have grade B minus expectations. What would be a grade A setup? Well, whenever we went long IONQ on this day here, IONQ gave us a pocket pivot point signal right off the 21 and 50 SMA. It was in my loose squeeze weekly scan. Quantum stock, catalyst driven name. No surprise, in 2 weeks, we got a move of 70%. And what did we trade at Big Wave Trading? We played IONL. And so IONL in 2 weeks moved 177% for us. So is PUK going to do IONQ? I don't think so. I doubt it. So I'm going to get long above the high of the day, and whatever account capital I have on the books and cash, I'm going to use it and risk this entire trade all the way down to here. But if it triggers and fills on Monday, and if it doesn't explode higher immediately, whatever Monday's low day is, first stop, second stop, third stop, final stop. That'll prevent a full loss of the account capital into PUK. Other stocks of interest, just so to let you guys know that I'm watching, AAOI, CoreWeave, Encircle. I didn't get my hammers off the lows. My moving averages are moving lower on Circle. They're moving lower on CRWV, but I'm watching these closely. And AAOI, I would like this one to consolidate a little bit longer and get a 21 EMA signal, and then I would be more than happy to get long this name. But PUK is the only idea I have this weekend. And just to let you know, this week we had Dell as the idea right off the 21 EMA. You can see what it looked like. I went long via DLLL. And yes, I will be taking some profits at the market at the open on Monday. Also went long RR off the 21 EMA. Initially, it was this signal, but then it had that setback, but maintained that green BOP. Then we reclaimed the 21. Buy stop was moved to above yesterday's high of the day. RR, great day today. Once again, we'll be taking another 10% off the table. But RR and Dell are much better than PUK. PUK has no catalyst behind it. The group relative strength is not that strong. It's an insurance stock, has very strong fundamentals, but it doesn't have that juice. So grade B minus signal. That's all I got. Have a lovely rest of your weekend, everyone. Aloha.